Let's get a gilt market view here, because the gilt markets, responded to the vote split initially. By the end of the day, we did see gilt yields up a little bit, as if they were more alarmed, perhaps, by what we'd heard on inflation and the inflation forecast. Put it all together for us, your view on gilts after this Bank of England meeting.
Morning, Anna. It was a terribly interesting meeting from the Bank of England. The key to getting a grip on the BOE's messaging, though, was to look beyond that dissent vote. I think what confused a lot of traders was that dissent vote from a very hawkish member, Catherine Mayan. So I think that's what confused the markets. But if you strip out the dissent vote, you really see barely anything in that report that could be construed even as mildly dovish. The BOE revised its growth forecasts lower for this year, and they revised up the inflation forecast for the forecast horizon. And they think that inflation is going to be 3.8% at the peak this year. So if your inflation is going to bob around 3.8%, your benchmark rate can't really go below 4%, I beg your pardon. So if the markets are thinking, the rate is at 450 now, if the markets are thinking that we are going to get 3 rate cuts, they are smoking something that they shouldn't be smoking. We are not going to get more than 2 rate cuts. And March is not alive on the table, as was mentioned earlier. It's going to be May. The next earliest May rate cut we are going to get is in May. So I think the BOE introduced additional language yesterday saying they're going to be careful. And if you strip beyond the dissent vote, you will see why it is that they introduced that word careful.
There was also a lot of talk about productivity yesterday, Ven, and the fact that basically the UK doesn't have any, or certainly no productivity growth. If you extend that thought, you end up with the conclusion that if the UK, if the bank cuts, it's going to stimulate growth. And if there's no productivity growth, that growth is going to be inflationary. So the Bank of England presumably can't cut very much until productivity picks up. Absolutely,
which is why I think that, I think, you're not going to get more than 2 rate cuts at the max. Because, if your inflation is going to be sticky as it is, and if you look at the 2-year inflation break-even rate guy, that's really got the message for you, real central message from the markets. Before Reeves presented a budget, it was bobbing around 3%. It's now bobbing closer to 4%. So I think that the markets are saying that, look, you've got a mighty inflation problem here with all that spending and borrowing that you've outlined in the budget. So how are you going to square that circle is what the markets are asking the BOE. And the BOE, for one, are saying that, look, we are not going to be able to square that circle. Let's face it, we are going to be careful. We are going to be cautious in cutting rates further, which is why I think that we are going to get more likely to see 2 rate cuts from the BOE here rather than 3 rate cuts that the markets are factoring in.